Hello everyone. See here. So prepare an income and expenditure account from receipts and payments account. See, you may able to know. Okay. And list the features of income and expenditure account, how it is to be prepared. So see here, the previous class already we know that income and expenditure account, the second account is prepared in non-trading organization. It is similar to profit and loss account. It follows the nominal account rule. The rule is debit all losses and expenses and credit all incomes and gains. That rule should be followed by income and expenditure account. Okay. So see here, it is similar to profit and loss account. It is similar to profit and loss account. Similar means same. Means it is same as. It means income and expenditure is same as profit and loss account. Only names are changed. Okay. It covers all revenue expenses. Already we know only revenue items posted in income and expenditure, paid as well as payable, and all revenue income received as well as receivable during a current year only. During a current year only, not previous or future, only current year. Okay, income and expenditure should allows only revenue items. Income and expenditure of previous or future period are included. Capital income and expenditure also avoided. Profit is termed as excess of income over expenditure. The word profit is used in profit and loss account. Excess of income over expenditure used in income and expenditure account. Whereas loss is used in profit and loss account, and expenditure of over income is used in income and expenditure account. So preparation of income and expenditure account from receipts and payments account. See here, a scrutiny of receipts side items of revenue nature of receipts and payments accounting related to current year will be done. Only revenue items, and that should belongs to the current year only. That item should be recorded in revenue income and expenditure account. These items appear on the credit side of income and expenditure. Whatever the items posted in receipts and payments debit side, that should be posted in credit side of income and expenditure. Okay. Outstanding amounts, if any, must be added of that particular year only, current year only, not past or future. The outstanding amount will appear in the balance sheet also. Okay. The see here, the example 1. Receipts and payments account shows subscriptions collected 25,300, including rupees 1450 for the next year, but subscription for the current year not yet received 1000. Find out the subscriptions for the current year. So see here, the subscription received 25,000, subscription received in advance 1450. For the future, it should be deducted, and 1000 to be added, means it is outstanding of the current year. So it should be added. The net result is 24,850. The subscriptions received in advance will appear in balance sheet on liability side. The subscriptions outstanding will appear in balance sheet on asset side. Received in advance is posted in liability side. Outstanding is posted on asset side. Next year, these two accounts will be transferred to subscription account. Next, preparation of income and expenditure account from the receipt side payments account. See here example 2. Salaries paid rupees 2000 for 2007 rupees 9600, and it includes 700 of 2006, and at the end of 2007 900 is unpaid. The salaries for the current year will appear as follows. The total is 9600. Last year included 700 will be deducted. Why? Because it is not belongs to the current year, that is not belongs to the year 2007. It should be deducted 700. Okay, and 900 is to be added. Why? Because it belongs to the current year. So answer is 9098. So see here explanation. Unpaid salaries of rupees 900 to be shown on the liability side of the advance. Okay, unpaid salaries to be shown on liability side. Salaries for the current year 9800 to be shown on debit side of income and expenditure account. So see here example 3. From the following receipts and payments account of the Union Club for the year ending 31st December 2000, prepare income and expenditure account and receipts and account for the year ending 31/12/2000. To balance brought down means opening balance 1/1/2400, to subscriptions 7200, to entrance fee 4460, to interest on investment 1200, to proceeds from lectures 2000, by upkeep grounds 4000, by wages of grounds men, by wages of groundsmen 4500, by ground rent 150, by printing 650, postage 60, by balance carried down 31/12/2000 1900, total is 11,260. So additional information also there. Now see here, this item includes 500 applicable to previous year. This item includes rupees 150 applicable to previous year. Entrance fee are to be capitalized. The outstanding items as on 31st December are printing rupees 300, wages to groundsmen 500, subscriptions outstanding 300, and subscription received in respect of previous year or 500. So see here solution. Since entrance fee or capitalized, they are not recorded income and expenditure, that should be recorded in the balance sheet. So see here, first we are preparing income and expenditure account for the year ending 31st December 2000. Expenditure rupees, income rupees. To upkeep of grounds 4000, less expense of previous year 500, total is 3500. So Already we know that income and expenditure should take only the current year transactions, not the previous or past. But in case of receipts and payments, it should take all items irrespective of the year, whether it is capital or revenue, whether it is capital revenue, capital expenditure, revenue income or revenue expenditure, or irrespective of the year, whatever it may be, it should be recorded in receipts and payment. Whereas coming to income and expenditure, some rules and regulations are there. That is, revenue items may be recorded and the particular current year items only recorded. For that, we are deducting the previous year's expenses. 500. Net is 3000. To wages of groundsmen, 4500. To outstanding wages, 500. 5000. Ground rent, 150. To printing, 650. Outstanding, 300. 950 plus expense of previous 150 to be deducted, 800. By subscription, 7200 minus 300 outstanding plus 300, 7500 minus subscription of previous year, 7000. By interest on investments, 1200. By proceeds from lectures, 2000. Total 800. Balance total 10,000. So see here, the following is receipts and payments account of Lucky Club for the year ended 31st 12 2000. Receipts and payments account for the year ended 31 12 1977 is a receipts and payments account. With this receipt and payments account, we have to prepare income and expenditure account. So see what are the items are there. To balance 1177, 745. To subscriptions, 6800. To entrance fees, to interest, 260. Proceeds from lectures concerned, 420. Entrance fees, 250. To interest, 420. To proceeds from lectures concerts, 2590. By upkeep of grounds, 4750. By wages of groundsmen, 4680. By ground rent, 105. Printing and stationery, 485. Postage, 95. By balance, 720. Okay. See here, the balance is opening balance. It should not be recorded in income and expenditure. So we have to eliminate it. It is not recorded in income and expenditure account. Subscription, it will be recorded. It is as a revenue item. It should be recorded in income and expenditure account. Entrance fee, if there is no adjustment, it should be recorded in. It treated as revenue item. It should be recorded in income and expenditure account. To interest, it is a revenue item. Recorded in income and expenditure account, 260 as a receipt. To proceeds means receipts from lectures, concerts, 420, 2590. See here, its payment side, it should be by upkeep of grounds, income and expenditure, wages of groundsmen, capital, ground rent, income and expenditure account, printing and stationery, income and expenditure account, postage, income and expenditure account. Balance, closing balance will not be taken. Opening and closing balance will not be taken in income and expenditure account. So see here some additional information. This item includes 100 applicable to the previous year. This item includes rupees 250 applicable to the previous year. Entrance fee ought to be capitalized with the outstanding items as on 31/12/1977 printing stationery 80. The Social Literary Association 105 User Clubs Hall. From the above we have to prepare the, so we need to adjust the above receipts and payments account. With the help of adjustments we need to prepare the income and expenditure account. Second one, from the following receipts and payments account of the Karnataka Club, prepare an income and expenditure account for the year ended 31/12/1979. So, with this information, we have to prepare income and expenditure account with the help of receipts and payments. To balance 1179 means opening balance 2220, only 220. It should not be recorded in income and expenditure. Why? Because opening and closing balance are not recorded in income and expenditure account. Entrance fee 100. It should be recorded in income and expenditure account. To donations 14,000. Income and expenditure. Subscription income and expenditure. To sports fee 4,500. Income and expenditure account. Sale of old furniture capital item. Interest on investments income and expenditure account. By investments capital item, it should not be recorded in income and expenditure account. By furniture 1200 capital expenditure, it should not be recorded in income and expenditure account. Salaries 1600 income and expenditure. Payment side, by rent it is a income and expenditure revenue item. Post rate debit side. Sports equipment capital expenditure. Balance sheet not posted in income and expenditure. Advance for purchase of buildings balance sheet. Sundry expenses the revenue item should be recorded in income and expenditure account. Balance closing balance not recorded in income and expenditure account. So additional information is there. So mixing of these both receipts and payments and additional information, we can prepare the income and expenditure account. It was decided to treat 1/2 entrance fee and donations as income. So half of the entrance fee and donations are should be divided into two parts. One part is for revenue and second is capital. Outstanding salary and rent were rupees 200 and rupees 100. In 100, 100 is applicable to previous year. Okay. Half of the entrance fee and donations to be capitalized means half of the portions of entrance fee and donations to be transferred to income and expenditure account, that is revenue. Remaining of to be capitalized posted in balance sheet. Subscriptions outstanding 1979 to be adjusted. See here some hints. Sale of old furniture is not a revenue income and should not be taken in income and expenditure account. Already I said that. The items investment furniture advance for purchase buildings or capital items should not be taken in income and expenditure. The answer is 5,650. Now see here, next third one. The following is the receipts and payments account of the Indian Club for the year ending 31/12/1979. The balance 1/1/1979 500, subscription 6,800, to entrance fees 260, to interest for investments 400, proceeds from lectures 2,500, upkeep of grounds 4,800, by wages of groundsmen 4,800, by ground rent. So for printing 8,500, postage N80 balance. So additional information, this item include rupees 300 applicable to previous year. This item includes 100 applicable to the previous year, and interest fee to be capitalized the outstanding items. So these are all considered, and mixing of these receipts and payments account and additional information we have to prepare income and expenditure account. The same as all should be taken as same. Okay, so by solving these problems you may able to prepare the income and expenditure account very thoroughly. Okay, thank you.